The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Well, we have a couple of specialty retail stocks that are in the aggressive growth spotlight with an emphasis on short squeezing. And so our aggressive growth strategist, Brian Boland, is going to tell us exactly what that means.
Right, and this is a pretty aggressive play. You know, when we talk about short squeezes and things like that, that is an aggressive idea, because what we have is a little bit of financial engineering happening, and the possibility for good-sized gains come in. But, you know, we're talking about retail stocks, Terry, and retail stocks have been murdered over the last year or so.
Yeah.
You know, Amazon.com is killing everybody, I guess, right?
Yeah, but everybody doesn't understand the short squeeze concept.
Right. And we'll get to that. We'll show that here, but let's go jump right into the first one, and we'll talk about why it's on the radar at all here.
Okay, Conn's.
Conn's. It's a Zacks rank #1. That's a strong buy. It has an A for growth, a B for value. So that #1 and an A automatically puts it on my aggressive growth radar.
Right.
So if we take a look at the estimates, you know, why it's #1, we see estimates of moving higher, 51 cents to 88 over the last 90 days for this year. $1.14 to $1.98 for next year. So you're looking at really good year-over-year growth from 88 cents to $1.98. We can see the earnings history has been really good. It has been beating. It has been beating big time. 350% is the most recent beat. And we can see all these beats here. The things have really turned around here for Conn's. But, you know, over the long term, there is this feeling here from, you know, a few years back when the stock was in the 60s and 70s. This downturn is still fresh in everybody's mind. And this brings us to the idea of the short squeeze. So when you have a stock moving down like that, a lot of people are short it and remain short the stock. And especially once it has seen this uptick here recently over the last year or so, even though it's been beating estimates, people are still down on it because they believe that Amazon's still going to be eating its lunch. So they sell the stock short. So what that means is they borrow somebody else's shares, they sell them in the hopes that later on the price will be lower where they can buy them and give them back. They'll keep the difference in between. So if we take a look at this screen here, this is from shortsqueeze.com. It tells me that 27.3% of the float is sold short. And this gives me a neat little thing here. It tells me what the reading was the most recent time and the current reading. So we can see that the shorts have increased their position size from 5.1 million shares to 5.2 million shares. A small 2% increase, but the idea is just a gigantic amount of the float is sold short. So when that happens, if the price keeps on moving, all these shorts, these 5 million shares that are out there sold short, not all of them, some people are going to remain in it, and as some cover, some new ones will take their place. But that could present an opportunity to lift the shares even higher. So dangerous spot right now, a crowded trade on the short side for Conn's.
All right, so then Hibbett Sports is the other one that you've identified here.
Right, and I wanted to stay in the vein of retailers here because it is kind of an easy play in here. So we do have a Zacks rank #1 strong buy, only a B for growth, but I'm not going to let that one slow me down because it's right in that same vein here. And we can see this one as well has got earnings estimates moving up nicely, $1.30 for this year, moving up to $1.44, $1.18, moving up to $1.40 for next year. So that's good. And they as well have been beating, not quite to the same degree that Conn's has, with one meat in there. So, but still a 25% average over the last 4. If we look at the chart here, it's even more pronounced where you know, things were good in the 60s and 70s and then really getting crushed down here. But only as of late, really turning it around here. You know, the last beat here is 76% positive earnings surprise. So, you know, estimates really came in. So now the expectations have been lowered, and that really sets up the idea of the short squeeze because the shorts are really on this one as well. You know, 25% of the float, almost 26% of the float sold short. That's 4.8 million shares, and you can see the shorts are what I like to say pressing their bets here, moving from 4.3 to 4.8 million, another 500,000 shares coming in the short. So that's an extra 12% increase of the amount of shares sold short on this one. So that gets it into dangerous territory here. If the shorts start to feel the panic of a squeeze, they're going to run for the exits. And by running for the exits on the short side, they're going to be buying the stock and pushing it higher as they do.
All right. Do you own these?
I do not.
All right. A couple of stock picks and some education besides. Happy holidays.
Yeah, happy holidays to you too, Terry.
You're dressed for it.
I always am.
Don't forget, you can see articles written by Brian on a variety of subjects as well as other stock information on our website, zacks.com. Just get over to the homepage and you can link to it all from there. With Brian, I'm Terry Ruffalo.